right now.
So are you licking your chops? Are we going to see you get more active?
We are, and we will be a lot more active.
In buying a public company?
Public companies and private companies. The other big trend you're going to see is as these PE multiples in software have come down, now those software vendors, the large ones, are not at risk of having PE multiple compression if they buy somebody else. And they find a lot of benefit right now in consolidating their markets because they can really broaden their platform to be better prepared to serve their customers in the AI world. Now, all this AI excitement that our companies have, and we're moving very quickly with it, once again, think about it as eliminating or making the labor more productive that's already working with you, that's already working with your system. This is going to be a multi-decade growth opportunity. It will not happen overnight. It'll be evolutionary, but it'll be an incredible boom to enterprise software.
You want to give us any names when you're thinking about consolidation or interest?
It is so, by the way, how software works, what I just tried to explain, and the domain franchise of a software company that very, very few people have, that cannot be copied by an AI code because you have to prompt it, or cannot be copied by somebody in Silicon Valley, that is so incredibly valuable. Now, you do need the leadership at these companies, and that's where private equity comes in and puts the right leadership in place to both take care of the present and the future and move these companies along very predictably. But look, I think there'll be many phenomenal consolidators, from ServiceNow to Salesforce to others. And we have many in our portfolio, like Anaplan, that we thought, oh, we'll take this company to be worth 20 to 25 billion. Now we're looking to consolidate the market and make it worth 50, 70 billion dollars. There's a huge runway of opportunity that just appeared upon us because, once again, an enormous infrastructure, much bigger than cloud, more transformative than cloud, is being built that these domain experts will just grab to provide solutions to their customers.
But you see it entirely mispriced. What does it mean for the exits? For, when you talk to strategic buyers, a lot of the CEOs here and these companies, does it make it less appealing? Is it going to be tougher for you to unload some of these companies?
That's partly why I'm here. I'm meeting all of our potential partners, all of our strategic buyers, and we have the benefit of the following. Our investment strategy has been buy the number one player in that domain, the number one, even if we pay up for it. And second, try to run that player from 10% margin to 40%, so these strategics can consume it much more easily into their businesses. Have the best run number one player in the industry. That's what we're building. That's what we look to build. But now we're moving our companies to AI, once again increasing their growth rate. Look, many of our companies just finished their year in December. Some have a January year end. And we saw a big boom in the quarterly bookings of these companies, partly because of the takeoff in AI.
So when you think about what the trajectory looks like in the coming years, how does it look to you? We were just talking to Ken Griffin. He was saying, yes, companies are using it, but he thinks adoption is going to be slower, transformational change, more 5-10 year story.
I agree with Ken 100%. I did hear him right before I came on, and he said 10 to 15 years.
10 to 15. Yeah.
I would say even longer. The corporate world, once again, is evolutionary, not revolutionary, and it works slowly over time in terms of its adoption of new technologies.
Well, it was certainly a pleasure having you here to react to the president and also react to what we're seeing in the markets. Orlando, thank you.
So good to see you.
Thank you. Good to see you as well. First Davos, Orlando Bravo from Thoma Bravo. Carl, who says he's here to meet with potential buyers and CEOs and strategics.